Ahead of the open, we are calling the Australian market up 0.8% at 5057. Of course, it's been a situation whereby the miners have been dragging the market lower, whilst the yield plays have been helping underpin the market and push us higher. Of course, today we'll be looking out at the sort of influence US earnings will have on the local market. We had Apple extending its gains after hours, after they announced a monster $50 billion buyback, and that's really helped set the tone for Asia earlier on. Of course, we've got BHP pointing a bit higher, but commodities remain relatively weak, with most of them actually losing ground overnight. We'll have to continue to monitor how analysts react to some of the reports we heard yesterday, particularly Woodside, which announced that special dividend of 63 cents. Of course, that news was largely cheered by the market yesterday, and the company's actually got an AGM in Perth today. It'll be good to see to get a bit of a good read of what the company is expecting going forward, and whether or not the yield plays the new thing for some of these resource names which have not been known for paying dividends for a long time. Now, at the same time, we've got the CPI numbers due out at 11:30 today, expecting a 0.7% rise. Of course, following the recent weakness in the local economy, a lot of analysts out there are saying we might get a benign reading on CPI, and with inflation well under control, this might prompt thoughts that maybe we might need another rate cut to show up the local economy. There's quite a few factors playing against the Australian dollar at the moment. We've got ailing China data, we've got commodities just failing to gain traction, and at the same time unemployment here just continues to creep higher. So with the labour market showing signs of weakness, then it's really hard to see a way out for the Australian economy if we don't get any rate cuts to stimulate it. With the Aussie dollar, we'll be eyeing the overnight lows near 1022. Should we break those, then we'll have to eye the 102 handle, and if we can't keep a hold of that handle, then we might head back towards the March lows at around 1011.